Imagine this. A huge metro area growing like crazy, but housing prices almost flat. How does that even happen? Welcome to our deep dive into the Dallas-Fort Worth real estate market. We're looking specifically at the latest updates, from June 2025, covering both residential and commercial.
Yeah, and for this, we've really dug through a mountain of information. We've got market reports from MetroTex, Strider Real Estate, Greater Fort Worth Realtors, plus research from the Texas A&M Real Estate Research Center, insights from the Dallas Morning News, M&D Real Estate, and for commercial. We pulled from the big players, CBRE, Cushman & Wakefield, CoStar, Matthews Reese. It's a lot.
It is, and our mission really is to boil all that down, pull out the key nuggets for you so you can quickly get a handle on what's actually going on in, well, one of the most dynamic markets in the country. So let's start with residential. June 2025. It showed signs of a rebound, right? Prices stabilizing, sales picking up. But what does stabilizing really mean here? Some folks might hear that and think, uh-oh, crash coming.
That's a really good point, because stabilizing here definitely doesn't mean crash. Not at all. It means inventory, the number of homes for sale, has jumped up significantly. That's created a much more balanced feel between buyers and sellers, something we haven't seen in quite a while.
Balanced, like closer to normal.
Exactly. We're moving toward what's considered a balanced market that's typically 5 or 6 months of supply. DFW is now sitting at about 4.1 months, and that's a really noticeable jump from, say, 3.0 or 3.5 months just a year ago. It's a return to something more sustainable.
Okay, that makes sense. A big shift from the frenzy. So let's dig into some numbers for buyers and sellers. That median home price overall.
Right, $405,000. That's across all property types in June. And here's the key thing. It's up only 0.3% year over year. Tiny.
Barely a nudge. So prices have basically flattened out compared to last year, which is interesting because that reverses that slight dip we saw back in May.
Exactly. And this flattening happened even as closed sales surged. We saw 8,910 homes sold in June. That's up 8.2% from June 2024.
Wow, 8.2% jump in sales. So people were waiting.
It really looks like it. It suggests that a lot of pent-up buyer demand was just waiting for more homes to hit the market. They saw options and they jumped in. Finally.
And speaking of options, the active listings, the inventory number, that jumped dramatically.
It dramatically is the word. Up to 36,842 homes actively for sale. That's up almost 33%, 32.8% to be exact, compared to a year ago. That's the most inventory DFW has seen in, well, over a decade. So buyers, they actually have choices again.
Which must feel like a relief. And what about how long homes are taking to sell? Days on market.
So that's now at 52 days on average. It's up a bit from last summer, meaning homes are selling, a little slower, which, again, for buyers, that's good news. Still under 2 months, mind you, so it's not slow, but it's not that lightning fast sale we saw constantly before.
And sellers aren't getting quite as much over asking, I bet.
You got it. Sellers received about 95.4% of their asking price on average. That's down from around 98%, maybe even higher, last year. That definitely reflects more room for buyers to negotiate now that things have cooled off from that peak intensity.
So, okay, putting it all together, what's the big takeaway for someone looking to buy in DFW right now? Has the power really shifted?
Oh, absolutely. The power dynamic has definitely shifted. Buyers today have more options, way more negotiating power than they did in that, crazy 2021, 2022 market.
Yeah.
You're just far less likely to have to bid way over asking price. It's more like normal negotiation, which is a breath of fresh air for a lot of people.
Okay, let's break it down by property type. Single-family homes are driving that median price, right? Low $400,000, pretty flat year over year.
That's the core, yeah.
But there's some interesting variation within the Metroplex. Like Dallas County's median hit about $386,000. Up maybe 5% year over year, gaining a bit from 2024 lows. But then you look next door at Collin County, much higher median, $485,000, and that's actually down about 4% from a year ago. So you're seeing corrections in some of those pricier suburbs.
That's a really key point. It shows how diverse the market is even within DFW. Dallas County has, a wider range of housing stock, maybe more entry-level stuff, so demand stays strong there, pushing prices up slightly. Collin County, with all those big, expensive master-planned communities, it saw huge price jumps during the boom. So now, with affordability being such a big factor, it's seeing a bit more of a price adjustment, a slight correction downward.
Great, makes sense. And what about condos and townhomes? Smaller market share, but similar story.
Pretty much, yeah. Condos were hanging around the mid $250,000, roughly unchanged year over year. Townhomes, maybe high $300,000, also flat to maybe down 1%. Sales activity for those was a bit slower, actually. Condo sales in May, for instance, were down like 31% year over year.
Why slower for them specifically?
Mostly higher interest rates hitting those price points and maybe fewer investors in the market right now. Investors often like those kinds of properties. But even with slower sales, the prices held pretty steady overall, which again means buyers looking for a condo or townhome probably have some decent bargaining power too.
So if sales volume is up overall, but prices are flat,
Yeah.
where's the action concentrated? It sounds like the middle of the market.
Absolutely. That mid-price segment is really buzzing. Back in May, something like 27% of all homes sold in DFW were in that $300,000 to $400,000 range. It clearly tells us the activity is focused on the more affordable tiers. Buyers are really having to adjust to those higher mortgage rates.
So they're being practical?
Very practical, budget conscious. Luxury home sales, they've slowed down noticeably. But that mid-market, the first-time buyer segment, much stronger demand there.
And yet, despite mortgage rates still hanging around, 6.8% to 7%, demand in North Texas is still surprisingly strong. What's keeping it so resilient compared to other places?
It really boils down to two things: jobs and people. Just relentless, strong job growth and population growth. This isn't just pent-up demand finally getting released. It feels like real confidence in the region's future.
The growth numbers are pretty staggering, aren't they?
They really are. Think about this. Roughly 178,000 people moved to DFW in the past year. That's the third biggest population gain of any metro in the whole country. In fast-growing Collin County alone, that works out to about 128 new residents arriving every single day. It's like a small town moving in every few days. That constant inflow just creates this baseline demand you don't see everywhere else.
Wow. And jobs are coming too, fueling that.
Precisely. It's not just people moving without prospects. We saw nearly 500 major corporate relocations or expansions just in 2024. Like KFC moving its U.S. headquarters to Plano. That kind of thing brings good jobs, supports the economy, and keeps people moving here. It's the engine behind it all.
Okay, so wrapping up the residential side, you've got stabilizing prices, much more inventory, solid sales driven by population and jobs. What's the bottom line for someone thinking about DFW? Still a good place to live, good time to buy.
Well, look at that 8.2% jump in June sales compared to last year. That tells you something important. As soon as more homes became available, buyers were ready. They acted, even with rates where they are. A lot of them had clearly been sitting on the sidelines, just frustrated by having nothing to choose from. So if you're looking to buy in DFW now, you're walking into a market that's way less competitive, offers way more selection than it has in years, and it's still fundamentally strong because of that growth. It just feels like a much healthier, more balanced environment to be buying a home in.
All right, great summary. Let's shift gears then. Commercial real estate in DFW, mid-2025. How's that looking overall?
Broadly speaking, it's pretty robust. You've got strong fundamentals in key sectors like industrial, retail, even multifamily is showing strength. Office is the softer spot, no surprise there. But even it's showing some, interesting signs of life, signs of improvement. DFW's diverse economy really helps it weather national headwinds better than many places.
Okay, let's start with that softer spot, office. Yeah. Vacancy is still high.
Yeah, overall vacancy is hovering around 17.9%, still elevated compared to before the pandemic. But there's good news. Leasing activity really picked up in 2025. Q1 leasing hit 3.5 million square feet. That was actually the strongest first quarter since before the pandemic, so a noticeable uptick.
And crucially, Q2 brought some positive net absorption, right? The first time in a while.
Yes, that was a big milestone. Positive net absorption in Q2 2025, about 320,000 square feet absorbed in Class A office space. That's the first broad positive absorption we've seen since way back in 2021.
So what's driving that, especially in Class A? And what does it tell us about what companies want in office space now?
It's really all about the flight to quality. About 70% of the recent leases were in those top-tier Class A buildings. The newest, the ones with the best amenities, in the most desirable areas like Plano Frisco or Uptown Dallas. Companies want spaces that draw employees back, spaces that are modern, efficient, attractive. Meanwhile, those older Class B, Class C offices, they're still struggling. Vacancy remains high there because tenants are demanding more.
And rents, are they moving?
Asking rents for Class A average around $32.20 per square foot, full service gross. That's actually up about 1.4% from a year ago. And this is a big score, but landlords are still having to offer pretty generous concessions to get those deals done. We're talking 4 more months of free rent, maybe $36 per square foot, and tenant improvement allowances to build out the space. So while the asking rent is up slightly, the effective rent, what tenants actually pay after concessions, is probably closer to $26 per square foot lower.
That's really interesting. And, what's compelling is how DFW's office rents stack up nationally. That 32 average asking rent, still a bargain compared to the U.S. average of around $36. Even the very best submarkets in Dallas, maybe hitting $40, $50 a square foot, that's still way below prime space in coastal cities. That affordability must be a huge magnet for businesses.
It absolutely is. It's a major competitive advantage for DFW. Now, moving on to DFW's undisputed champion right now, the industrial sector.
Ah, yes, warehouses and logistics. Still booming.
Incredibly strong. Demand and supply are kind of reaching a healthy balance now. Vacancy actually ticked down slightly in Q2 to about 9.2%, a little lower than the 9.4% a year ago.
And the absorption numbers are just wild, aren't they?
Just staggering. 25.9 million square feet absorbed net over the past 12 months. Think about that scale. It's huge. And that massive demand kept vacancy low, even with tons of new construction hitting the market. In fact, Q2 was the first quarter since mid-2022 where demand actually outpaced new supply coming online. That's a really healthy sign.
And rents are still climbing.
Yep. Asking rents average about $9.90 per square foot per year, triple net. That means the tenant pays taxes, insurance, maintenance on top. And that's up about 4.5% from a year ago. DFW is just a powerhouse for distribution, e-commerce, manufacturing. Its central location and infrastructure are huge draws.
Now, beyond that general strength, I've heard a lot about data centers reshaping things in DFW. Is that hype, or is it really a major factor?
Oh, it's not hype at all. It's a huge factor. What's really interesting, maybe even transformative, is this data center boom. The demand from these operators is just intense. So intense that land sites with existing heavy-duty power infrastructure, they basically become like gold mines. Utilities like Encore are reporting unbelievable power requests, 59 gigawatts in just one quarter. That's enough to power millions of homes. It's actually changing how industrial land is valued. It's not just about the dirt anymore. It's about the power capacity available on that dirt. Access to substations, transmission lines, that's commanding a huge premium now.
Fascinating. Okay, shifting to retail, you said that's also surprisingly strong.
Remarkably strong, yeah. Especially compared to a lot of other U.S. cities. Vacancy is super low, about 4.7%, maybe down just a tick from 5% a year ago. And get this, DFW retailers absorbed, net, about 2.3 million square feet over the last 12 months. That was the highest retail absorption of any market in the U.S.
Wow. Highest in the U.S. What's driving that?
It's pretty straightforward. Population growth and rising incomes. More people equals more shoppers. Asking rents are around $24.59 per square foot, triple net, and rent growth is solid, maybe 4 or 5% year over year.
And new stores are filling up quickly?
Almost as fast as they build them. About 70% of the 4.4 million square feet of retail under construction is already pre-leased. That's strong demand. Especially for grocery-anchored centers, people always need groceries, and that experiential retail people talk about. And you see players like H-E-B expanding aggressively with their new Joe V Smart Shop discount stores. They clearly see the opportunity here.
They definitely seem to know where the growth is. Okay, last major commercial sector. Multifamily apartments. Bit of a different story there recently.
A bit, yeah. DFW delivered a record number of new apartments in 2023. Just a huge wave of supply, and that definitely pushed the vacancy rate up. Right now, vacancy is around 11.5%. That's still elevated compared to the, say, 8 or 9% we saw pre-pandemic.
But are there signs things are starting to turn around? Is that new supply getting absorbed?
Yes, definitely positive signs emerging. Q1 of 2025 saw positive absorption of 7,400 units. That was the strongest first quarter for leasing since way back in early 2021. And significantly, it was the first time vacancy actually ticked down quarter over quarter since 2021. So it suggests that huge glut of new apartments is slowly but surely getting filled up.
And what about rents? Are they still climbing?
Rents are basically flat year over year, averaging around $565 per unit. After years of big increases, they've leveled off because of all that new supply. And because of that, landlords are still offering pretty hefty concessions. Over half of the apartment communities in DFW are offering deals like 6 or 8 weeks of free rent to attract tenants.
Roll, lots of new buildings still coming.
Still substantial, yeah. Around 45,000 units are currently under construction. And developers are pushing further out into new submarkets on the edges of DFW, chasing cheaper land.
So if you're looking to rent an apartment in DFW right now, sounds like a pretty good time. Lots of choices, maybe some deals.
It's definitely more favorable for renters than it has been in several years. You've got plenty of choices, lots of new buildings, and those concessions can save you real money. And interestingly, the high mortgage rates are keeping some people renting who might otherwise buy, which helps prop up demand. So the market isn't collapsing by any means, it's just rebalancing. Good news if you're hunting for an apartment.
Okay, last piece on commercial, the investment market. Higher interest rates must be impacting sales.
For sure. Higher rates have definitely put a damper on investment sales volume. We've seen cap rates expand. That's the rate of return investors expect. Office cap rates are maybe 8.59%, industrial around 6.5%, multifamily maybe 5.8%.
And for our listeners, when cap rates expand, what does that really mean for investors?
Right. When cap rates go up or expand, it generally means property values are softening relative to the income they generate. Or, put another way, investors are demanding a higher return to compensate for higher borrowing costs and maybe increased risk. This tends to slow down deals because buyers want lower prices, higher cap rates, and sellers are often reluctant to drop their price expectations. Creates a gap.
But investors are still interested in DFW.
Oh yeah, interest remains strong. DFW's growth story, its outperformance compared to other markets, is still very attractive. The focus is definitely on those strong sectors, industrial and essential retail. Multifamily deals have slowed because of that pricing gap, but there's optimism that activity will pick up later in 2025 or 2026 as rent growth potentially resumes and maybe financing costs stabilize a bit.
Okay, great overview of the commercial side. Let's look ahead then. What's the outlook for the rest of 2025, say Q3 and Q4, starting with residential?
The forecast is really for continued stability, trending toward even more balance. Home prices expected to stay pretty close to current levels, maybe modest single-digit growth, but no big swings expected. We'll likely end 2025 with the median price very close to where it started the year, around that $400,000 mark.
And sales activity, still strong.
Should see solid sales activity through Q3, summer moves, plus people taking advantage of that bigger inventory. Affordability is still a challenge, no doubt. But DFW's job growth, that steady influx of new residents, that provides a strong baseline demand. If mortgage rates dip even slightly later in the year, that could definitely spur some extra activity.
And inventory will stay high, around that 4 to 5 month supply range.
Yeah, that elevated supply is likely to stick around, hovering in that 4 to 5 months range, which, again, is much closer to a balanced market. And what's really significant here, looking longer term, is Texas's whole pro-development stance. Recent state laws, like HB 14 and SB 15, are actually designed to boost housing supply further. They make it harder for local governments to block zoning changes that allow for more density, encourage smaller lot sizes, basically facilitating more construction.
That sounds like a long-term strategy to keep supply coming. Are we seeing any immediate effects of that, or just generally more building?
We are seeing immediate effects in the pipeline. Large master plan projects are definitely moving forward. You've got things like Lakeview Landing out in Granbury, over 100 homes, nearly 300 apartments. And there's a massive 4,000 home community planned out in Terrell. These aren't just small projects. Developers are clearly committed to building at scale to meet that long-term demand, helped by the state-level push.
That proactive approach really does seem to set DFW apart. So overall residential outlook, steady, balanced, maybe gradual improvement in affordability if rates cooperate late in the year.
Exactly. Buyers should continue to find more relief, more options. Sellers need to be realistic on pricing, but should still find success in this more balanced environment. DFW's local economy remains a huge strength, expected to keep outperforming the national average.
Okay, now the commercial outlook for the rest of 2025.
Expected to finish the year on pretty solid footing, again, likely outperforming national averages. For office, that slow recovery should continue. We expect more positive net absorption, especially in Class A. Vacancy might tick down just modestly overall, but those landlord concessions, they'll remain a key part of the equation as they compete for those quality tenants.
And there's some interesting infrastructure projects finishing up that could impact things, like the Dart Silver Line.
Yes. That's a big one. The Silver Line commuter rail is supposed to launch by late 2025. That's going to really improve connectivity across the northern suburbs and should definitely spur more transit-oriented development along that corridor. Big potential there.
And what about converting old offices? Is that happening?
We might start seeing more of that, Some
Yeah.
of those underperforming older office buildings could start exploring conversions, maybe to residential or other uses. And new Texas laws, like SB 840, actually make it a bit easier now to convert commercial buildings to residential. So that's another tool in the toolkit.
And industrial. Still full steam ahead.
Pretty much. Maintain strong momentum, vacancy likely holding in that low to mid 9% range. Tenant demand stays high, logistics companies, manufacturing, e-commerce, and especially those data centers we talked about. Rents should keep climbing moderately.
Retail. Still strong.
Yeah, projected to remain quite strong. Vacancy likely staying very low, 5% or less, driven by all that population growth and rising incomes, especially in those fast-growing suburbs. Asking rents likely keep ticking upwards. And expect to see more grocery stores, more experiential retail leading the charge. You can really feel the energy in the retail sector.
Okay. And multifamily. You said it's at a turning point. What does that mean for the rest of the year?
It means we expect strong leasing to continue through Q3. That absorption could bring vacancy down a bit more, maybe into the 10 to 11% range by the end of the year, Q4 2025. Rents themselves will probably stay pretty flat overall for the rest of the year, and those concessions, like free rent, will still be widespread. But the key is demand remains really robust. So by the end of 2025, the apartment market should be clearly on a path toward recovery, setting the stage for maybe some modest rent growth to return in 2026.
And finally, capital markets. Investment. Still constrained by rates.
Yeah, high interest rates will continue to keep a lid on overall investment sales volume. But we are seeing more creative financing deals getting done, more public-private partnerships like C-PACE financing emerging. People are finding ways to make deals work. And those big infrastructure improvements like the Silver Line, highway expansions, they continue to support long-term growth and investor confidence, even with high construction costs remaining a challenge.
Okay, so wrapping it all up then. The Dallas-Fort Worth real estate outlook for the second half of 2025 looks, well, largely positive, wouldn't you say?
I would. The metro area's resilience, its adaptability, it's really been impressive. It's on full display right now.
You've got the residential market calming down, finding a more sustainable pace. Buyers get some breathing room, prices level off. It feels like a healthy transition toward normalcy after some wild years.
Right. And the commercial sectors remain vigorous overall. Industrial and retail are clear standouts. Multifamily is starting its comeback. And even the office market is seeing some positive signs, at least in the best buildings and locations.
And all of this is really built on that foundation of exceptional economic and population growth, right? That's what sets DFW apart and positions it to keep outperforming a lot of other metros.
Absolutely. That's the fundamental differentiator. It's a truly unique growth story.
So, as we close out 2025, you should expect to see DFW real estate looking more like a maturing, balanced market, less extreme than the recent past. Home buyers will find more choices, more negotiating power. Commercial players will still find plenty of areas for growth to focus on.
All the signs really point to Dallas-Fort Worth staying right at the top as one of the nation's most dynamic, most important real estate markets.
Which leads to a final thought for you to consider. As DFW moves toward this more balanced state, this new normal, how might that affect its long-term trajectory? Will this more measured, maybe more sustainable pace of growth change the character of DFW? Or will it simply solidify its position as this powerful magnet for people and businesses from all across the country? Something to think about.